Welcome back. It's been almost a month since Finance Minister Tito Mboweni announced tax measures to assist compliant businesses. His announcement was aimed at freeing up cash flow for businesses that would keep the economy running. But since then, economic conditions have worsened and government has received numerous calls for further assistance. These include requests from large corporates that are also experiencing substantial cash flow difficulty.
National Treasury says it has recognized the need for further assistance since the announcement of the first fiscal package in March. Treasury says that the current measures are not enough in assisting businesses or households through the crisis, especially as the lockdown has since been extended to next Thursday. Finance Minister Tito Mboweni says he has set up measures aimed at assisting individuals and businesses to stay afloat. These measures should provide 70 billion rand in support through tax reductions or deferrals of tax payments for compliant businesses. Treasury has made the assistance available through its two draft disaster management bills from the 1st of May. Together with the SARS Commissioner, Treasury will also monitor developments and the need for any further assistance in the fight against COVID-19. Nothando Makutulela, SABC News, Johannesburg.
The Solidarity Fund says it has raised donations totaling 2.6 billion rand towards the fight against the coronavirus. This, it says, was collected from 1,000 businesses and 75,000 ordinary citizens. It says its website will go live next week to ensure transparency. The fund held a webcast briefing today where it broke down all the monies received. Paul Bondi, the lead for fundraising, has thanked all those who have contributed.
The fund was launched a month ago with 150 million rand of seed capital donated by the state. It now stands at 2.6 billion rand. Of this amount, just around 1.6 billion has already been received in the fund's bank account. By way of more detail, around 1,000 businesses have made donations to the fund. But importantly, we are particularly grateful to more than 75,000 individuals who have contributed amounts ranging from as low as 2 rand to over 1 million rand. Every amount and every pledge is valuable to us and highly appreciated. It's also inspiring to see so many individuals and public figures having pledged a portion of their salaries in the coming months. This is a growing amount and an incredible act of solidarity. As President Ramaphosa reflected this week, taxpayers who donate to the Solidarity Fund will be able to claim a deduction from their taxable income. It's important to clarify that the Solidarity Fund is not administering all donations made by some high-profile families and foundations. They have set up their own relief efforts and they are being administered separately. In line with our principles of transparency, from next week, we'll be able to track pledges and see who is donating to the Solidarity Fund on our website.
Given the recent market volatility that has impacted South Africa since the advent of COVID-19, financial research teams in stock exchanges have collated insights on the best long-term and affordable local stocks to invest in now. Chantal Marx is head of equity research from FNB Wealth and Investments, and she joins us now. Thank you very much for coming through, Chantal.
Oh, it's only a pleasure. I'm happy to kind of be there.
All right, let's start with the JSE. How are the markets looking like now as the markets close?
Yeah, so as we are going into the close, the JSE is looking quite strong. It's actually outperforming global indices today, up in excess of 2%. If we look over at Europe, those bourses were up just around about 1%, maybe even less in some geographies, and the US also more or less 1% up. So we're doing very well, and we're being led higher by gold miners. They're doing particularly well.
So given the trend, how is the rand trading this afternoon? And also looking at, the issues that we often relate and refer to during market indicators, like, for example, looking at gold as well as oil. How are they trending?
So the gold price is quite strong today. It seems as if there's a little bit of a physical shortage of gold because demand for gold has increased quite a bit because of all the uncertainty in financial markets currently. If you look at oil, it has the exact opposite issue at the moment. There's too much oil. And that's why oil prices have been under a lot of pressure. At the beginning of the year, oil was trading at around even above $70 a barrel. It's now in the low 20s. At times, it even dips below $20 a barrel. And that's because of people not moving around anymore. So demand for oil has actually fallen quite a bit. So there you have it, oil and gold having the opposite problem. But the rand also, I think, has been quite volatile over the last few months. You have the rand having weakened all the way to 19 rand against the US dollar. Today, it's hovering around that level. Emerging markets are definitely not in favor when there's a lot of uncertainty in the world. And one of the things that you can look at to see whether or not emerging markets are in favor is, of course, the rand. So with the rand weaker, it means that investors are scared of anything that is deemed a little bit more risky, and they'd rather keep their money in developed markets and in gold. And that's, again, why gold is being supported. It kind of is it's a loop. Everything's connected.
Well, it sounds interesting now when it comes to equities. Is there still a slump on many or some? And are there any ones that are solid besides the headwinds and being subdued during this time of market volatility due to the coronavirus?
Yeah, so when we look at the equity market, it was sold off quite heavily and equity prices fell a lot into the end of March. But since kind of the lockdown period almost started, markets have come back a little bit and they do look a little bit better. But there is still a lot of uncertainty around what is going to happen to businesses going forward. And that will be reflected in equity prices. And whenever we see any sort of bad news or bad data, you might see share prices coming down again. So the kind of stocks that you are looking for right now are companies that will be able to see their way through this period and will come through this period a little bit less scathed than other businesses. So one of the businesses that we really like from a longer term perspective and that we think will weather the storm quite well is SPAR. If you look at SPAR, most of their shops are still open in South Africa, and then they also have shops in Ireland and they have shops in Switzerland, and there they are also still trading through this period. So while there will be losses in sales in terms of non-essential goods and alcohol in particular, you will see people go back to their SPAR to buy essential goods and groceries on a day-to-day basis, so they won't be nearly as impacted as other companies on the market. We also have a couple of...
So as you're talking about supermarkets, I mean, like one would say that, with reference to the interview we heard earlier, there's a supermarket manager who was saying that, there has been a 26% drop in sales. So it will be rather difficult to say that they're doing well given the drop. But I can imagine any company that is having non-activity at the moment and to talk about its share price. So now, which are the best stocks that one can pick during this time? And let's look at the ones that are the no-go areas, because I'm asking you with the context of people who are having the DIY trading systems, who don't want to listen to market traders or professionals, would rather do it themselves.
Yes, I mean, I think when it comes to picking stocks during a time like this, you need to be very careful of very low price stocks. Sometimes when it looks too good to be true, it usually is. One of the things that I quite like looking at overall, and that I think will probably stand investors in good stead during this time, is to try and look for companies that have low debt. A company might have a very low price because their debt levels are quite high. And in times like this, when you're not trading and you have a lot of debt to service, your cash flow situation might become extremely tricky. So as you mentioned, I mean, I had SPAR as an example, and while their sales are going to fall, the expectation is that it will probably pick up after COVID-19, and at least they are trading. So perhaps during this time, it's not the best idea to get involved in companies where you know that they're not making any money at the moment. And then, watch that balance sheet quite closely. If they have a lot of debt, they're going to struggle to service it with no cash flow.
So which industry would you rather pick in, without picking a specific company or institution? Let's look at the industry. I mean, like just before the lockdown was introduced, we looked at one Friday afternoon where pharmaceuticals were picking up. And when you look at tech companies as well, which were picking up at that time, it was due to forecasting that during the lockdown, people would be home and there would be online shopping. So there was a lot of investment in those kind of stocks. But in terms of forecasting, when it comes to the lockdown era and onto post-lockdown, post-COVID-19, how is forecasting done in terms of how or which direction a stock would take?
So I think we need to be very cognizant of the fact that it's almost impossible to determine when lockdown will end. And I think it's also important to realize that when the lockdown ends, things won't necessarily go back to normal straight away. You'll probably have an extended period of time where people are working from home, where they'd rather buy something online, and they'll stay away from the experience economy, if I can put it that way. So they'll stay away from restaurants, bars, casinos, and hotels, for example. So those would be areas to avoid. In terms of looking at what would be areas that would do well during this period and beyond, I absolutely take your point. I think pharmaceuticals will benefit from this. I think people will be very focused on their health and well-being. So not only in terms of chronic medication will these guys benefit, but over-the-counter medication will also do well, as well as vitamins and supplements. To that end, you can also expect pharmacy retailers like Clicks and Discount to do well. It all just depends on whether or not you're comfortable with the price that they're trading at, because some of these stocks have already done exceptionally well. And then you mentioned technology as well. This is an area that I think will continue to go from strength to strength. Different areas of technology, of course, will do better than others. I think technology, hardware and software and cloud solutions will do well. I think e-commerce will do well. And then, of course, streaming services. You must not discount streaming services. A lot of people might have given streaming a go for the very first time in their lives. And we've already seen these trends come through in the United States.
Well, thank you very much for coming through for that insightful analysis into picking stocks during market volatility. Thank you very much. Speaking to us live, Chantal Marx, who is head of equity research from FNB Wealth and Investment, and bringing us to the break. And of course, I'll be back in the